All right, let's dive right into the U.S. market action from Thursday, October 2nd, 2025. It was, to put it mildly, a really weird day on Wall Street. On the surface, the big indexes didn't move all that much, but underneath, there was this fierce tug of war going on between two massive opposing forces. And this, right here, is the central puzzle that had everybody scratching their heads. The government is literally on the brink of a shutdown, so how in the world did the stock market actually end up in the green? It makes no sense at first glance, but there's a fascinating, kind of twisted logic behind it.
You know, the best way to think about what happened is to picture a huge tug of war. On one side of the rope, you've got this incredibly powerful AI bull, just full of optimism, pulling up. And on the other, you've got this heavy, grumpy shutdown bear, trying to drag everything down into the mud.
So here are those two forces in action. Pulling the market up was this massive story about OpenAI's valuation, which basically lit a fire under the entire AI sector. Plus, you had this growing hope that all the political chaos would actually force the Federal Reserve to cut interest rates. But pulling the market down? Well, you had the shutdown fears, some intense political threats, and a really surprising drop from a market favorite, Tesla.
So here's how the day actually played out. The market opened strong, running on that AI hype. Then it dipped as the shutdown news got more serious. But then, this is where it gets weird. A strange logic took over. The market rallied back because some investors started to think that the bad news of a shutdown was actually, good news for stocks.
Now, this whole bad news is good news idea was partly fueled by something called the debasement trade. Sounds complicated, but the logic is simple. A government shutdown might force the Fed to print more money or cut rates, which could weaken the US dollar. So thinking ahead, some investors started buying things like gold and Bitcoin, basically as a hedge against a weaker dollar.
Okay, now let's see how this market tug-of-war hit some of the biggest individual stocks. It was a day of just wild, contradictory moves, company by company.
First up, Tesla. They announced they delivered a staggering 465,000 vehicles in the third quarter. I mean, this is a record number, a huge beat, the kind of news you would absolutely expect to send a stock to the moon.
But it didn't. Nope. Instead, Tesla stock got crushed, dropping over 5%. So what happened? Well, the market is always looking forward, right? And investors got spooked that the end of some key tax credits could mean a big drop-off in future demand. It was a perfect textbook case of good news being treated as bad news.
Now, on the complete opposite end of the spectrum, we have Fair Isaac Corporation, who you probably know as FICO. Their stock just exploded, jumping 18% in a single day. This was all because of a brilliant strategy change. They announced they're going to start licensing their super important credit scores directly to businesses, cutting out the middleman. The market absolutely loved it.
And of course, you can't talk about the day without talking about NVIDIA. They were seen as the biggest beneficiary of the OpenAI-driven AI investment craze. That OpenAI valuation news was basically rocket fuel for the whole sector, and since NVIDIA makes the essential chips for AI, they were the #1 winner. The stock hit an all-time high, and it pretty much pulled the whole semiconductor industry up with it.
And this just goes to show how company-specific news can totally ignore what the broader market is doing. You had Navios to shooting up after revealing the huge scale of a cloud contract it landed with Microsoft. But on the flip side, look at Occidental Petroleum. It fell hard. Even though it sold off a part of its business, investors were still way too focused on the massive amount of debt it's carrying.
So, that's the battlefield. You've got AI mania on one side, political chaos on the other, and all this contradictory company news in the middle. Given this incredibly messy picture, how could an investor even begin to think about what to do next? Well, let's look at 3 pretty distinct strategies.
You can think of these as different paths, and which one you take really depends on your appetite for risk and what you think is actually driving things. You can lean into the hype, you can hedge against the chaos, or you can just play it safe and wait for the storm to blow over.
So really, it all comes down to which story you believe in the most. If you think the AI revolution is just going to steamroll everything else, you might look at a fund that tracks semiconductor stocks, like the ETF with the ticker SOXX. If you're more worried about the dollar getting weaker, a gold-backed fund like GLD could be your hedge. And if you just want to play it safe, a broad market fund that follows the S&P 500 like SPY might be the way to go.
Okay, so let's zoom out and try to nail down the big picture takeaway.
When you cut through all the noise of the day, there are really two competing stories that are defining this market right now.
This lays it out perfectly, the bull case versus the bear case. The positive view, the bull argument, is that we are in a powerful AI-driven market, and all this political noise is just a distraction. In fact, from this perspective, a shutdown is a good thing because it pressures the Fed for cheaper money. The negative view, that the market is at all-time highs and is completely ignoring serious economic risks, setting us all up for a major fall if inflation makes a comeback.
So as you watch things unfold, it really all boils down to these two critical risks. First, what if the market has the Fed completely wrong? If inflation pops back up, that whole dream of rate cuts could just vanish. And second, what if this shutdown isn't just political drama? If it really drags on, it could start to cause real, tangible damage to the economy that even a crazy AI rally can't ignore.
And that leaves us with the ultimate question. They always say that bull markets climb a wall of worry, but there's a really fine line between courageously looking past risks and just blindly ignoring a cliff's edge. Right now, the market is walking that line, and only time is going to tell which side it's actually on.